So our last session of the day is a panel on privacy and digital fiat currencies, which we all know has been one of the biggest trends of 2020, featuring Dan Gorfine from Gattaca Horizons and the Digital Dollar Project, Neha Narula from the Digital Currency Initiative at MIT's Media Lab, and Bob Bench from the Federal Reserve Bank of Boston. And this discussion will be moderated by Vanessa Kargenian of FCAT. So I'll virtually pass the mic over to you, Vanessa.
Great, thanks. Yes, my name is Vanessa Kargenian, and I am a director of research here at FCAT. I am focusing on the future of money and money movement. And I can tell you, I'm excited to be joined by three panelists who are truly experts in their space. I know we just had a brief introduction, but just wanted to do maybe quick introductions to our panelists. Neha?
Sure. Thanks, Vanessa. Yeah.
Yeah.
Hi, my name is Neha Narula, and I'm the director of the Digital Currency Initiative at MIT. We work on cryptocurrency research and technology, and we contribute to open source software. And we are also thinking about how to design digital currencies more broadly, including central bank digital currency.
Brilliant, thanks. Bob, could you give us a quick intro?
Sure, thanks, Vanessa. My name is Bob Bench. I am an assistant vice president at the Federal Reserve Bank of Boston, leading a team focusing on central bank digital currency research and partnering with MIT's Digital Currency Initiative on building a prototype central bank digital currency and understanding the trade-offs therein.
Excellent. And Dan, not last but not least.
Great, thank you, Vanessa. So I'm Daniel Gorfine. I'm a co-founder and director of the Digital Dollar Project. I previously had the opportunity to serve as the Chief Innovation Officer and Director of Lab CFTC at the U.S. Commodity Futures Trading Commission. I left the commission last summer to launch a fintech advisory and consulting firm. As we'll discuss today, the Digital Dollar Project is a not-for-profit effort that's focused on exploring U.S. CBDC, its potential design choices and related trade-offs. I'll leave you with the idea that we're very actively interested in testing and fully piloting a US CBDC. We think that's in the national interest, and glad to join all of you today.
Great, thanks. Well, we're excited. I'm excited that you guys were able to join as well. Just want a quick reminder that this session is being recorded. So we often hear that cash's appeal kind of stems from its ease of use and its anonymity. If I give you $20, then it's your $20. There's no intermediary that is needed to verify the transaction. You can turn around and use it because you possess it. There's worry then that in a cashless society, the use of a centrally bank-backed digital currency, or CBDC, will give the government too much control into its citizens' lives, as a digital record will be created for every transaction. Bob, what are the aims of the Federal Reserve CBDC efforts? Are you guys looking to replace cash?
Yeah, certainly not, Vanessa. And I think I need to preface all my comments where I speak for myself and not the Federal Reserve Bank of Boston or the Federal Reserve System. Certainly, our research is not about replacing cash, but our research is heavily, leaned upon what we learned from the Cash Office, which is run by the Federal Reserve Bank of San Francisco, which they understand why people like cash, what makes it attractive to them, and what about that cash product could be replicated in a digital currency. And then what trade-offs would we have to understand? And some of those issues are really important to understand. If this was proposed by Congress and if the Federal Reserve or Treasury were asked to build this, what aspects would be really important to make sure people wanted to use it in the first place?
So what are other central banks doing on this topic? Or what if you're not looking to replace cash? How do the needs for different central banks kind of differ?
Absolutely. And so each central bank needs to build, or she needs to choose to whether or not it needs a digital currency in the first place and what the product would look like. So the most common example I use is the Eastern Caribbean Central Bank. They are a collection of multiple islands that have a very costly process of sending fiat currency from island to island. It requires at least a $100 minimum fee, and it only can move as fast as the plane or boat that takes you from island to island. And so their requirements are it has to be cheaper than $100, and it has to be faster than a boat. And that's what they're building towards. Sweden is really seeing a loss of the use of cash. And so they're trying to build a full cash replacement that can really meet the needs of retail customers. In certain capital markets focused economies, they may be thinking of a more wholesale settlement central bank digital currency that can enable them to make their capital markets process more seamless. And so every central bank needs to think about their users and their economy and build it for that purpose. There is not a one size fits all that we have seen so far in our research.
What, just before I to keep thinking on it just for 1 second, maybe I don't know if everyone in our audience knows what's the difference between like a wholesale and a retail CBDC?
Of course. So a wholesale CBDC is a central bank digital currency that is primarily used by wholesale capital markets actors. So you think of them as large commercial banks who are moving funds between themselves, and maybe large corporations with their treasury divisions theoretically could hold central bank digital currencies. And so you have known institutions that are moving funds between other known institutions for clearing and settling large amounts of money. A retail CBDC, or otherwise known as a general purpose CBDC, is what you think would be you buying a Starbucks coffee, right? And so that is a very different stack of requirements for the technical side and the government building it. You need to know who your customers are, and how much you know your customers are becomes a very sensitive topic, depending on which country you're in. Every country has different feelings towards privacy culturally, and every country has different laws towards privacy. And so you need to, when you're building a retail central bank digital currency, you need to be very careful on how much you're collecting, what's the law around you collecting, and who needs to see that data that you're collecting in the first place.
Gotcha. Neha, that's a good segue into Neha. Can you maybe start to talk us through what are some of those technical trade-offs that you have been thinking about with the DCI in terms of designing CBDCs? There's a lot of different stakeholders that have to kind of contend with, and so obviously different trade-offs between speed, reliability, security. How do you kind of start thinking about that or about those different technical trade-offs?
Yeah, thanks. So I want to echo that probably different countries will do different things. There isn't going to be one sort of silver bullet solution for how this might work. And we're really at a stage right now where there are still so many different questions that we need to answer. So I don't think we're at a stage where we can just kind of pluck an implementation off the shelf and then stick it in and boom, we have a CBDC. There's still so many questions that remain unanswered. So some of these trade-offs are around things like, obviously, security is paramount. This is, if there were a retail CBDC or a wholesale CBDC, it would be considered critical infrastructure. What that means to me is that we need to think about using very well understood systems and protocols that have had a lot of usage in the real world, that we have evidence that they work well, that we've sort of, ironed out all the kinks and gotten out all the bugs. And so there's a trade-off between using the latest and greatest when it comes to cryptography, for example. Like we have seen with things like Zcash and Monero, that we can use these cryptographic primitives to get very strong privacy, actually. But these technologies are relatively new, and sometimes they result in bugs. Like there was an undetectable inflation bug in Zcash. Having that happen in a country's national currency would be unacceptable. So we have to make these trade-offs with really interesting cryptography and trying to make sure that we have a really secure system. Another important feature, at least for retail CBDC, is performance. So we want low latency, we want really high throughput, we want a lot of people to be able to have access to it. That's also going to limit some of the choices we can make in terms of how the system is implemented and how it runs. And then, I'd say as well, there's this real tension between how we consider users' privacy and how we go about enforcing the laws and regulations in a country, and also just the overall public policy goals of stopping terrorist financing, stopping traffic or crime, and really being able to use the tools of the financial system in order to track down criminals or to stop things that we think are important to stop. So this balance between privacy and achieving these goals is really challenging, and it's still an open question about how we can get there.
Yes, that was great. Thank you. That kind of sets me up. So then, Dan, the Digital Dollar Project advocates that the U.S. undertake pilot programs as a way to kind of advance exploration of U.S. CBDC. Why is it important that the U.S. issue a CBDC?
Yeah, no, thank you. So let me step back for a moment and try to level set why we thought that launching the Digital Dollar Project and exploration of a CBDC is so important. So during my few years at the CFTC, I spent a lot of time kind of meeting with and learning about tokenization efforts, crypto, blockchain. And the one thing that became abundantly clear to me is that there's better technology that exists today to move certainly information, and that can include information about value and unique ownership over value. So we know you can send an email halfway around the world with relatively few intermediaries and at rather low cost. And you can do the same today with an instrument or a financial asset. And so certainly my takeaway from my time at the commission is that this type of underlying digital infrastructure or plumbing is going to impact how we transact all types of financial instruments and assets, and that will include money itself. Now, last year, we obviously had some pretty high profile examples of this development. You had the announcement of the Libra project, which was obviously a private sector initiative. And we've had ongoing announcements about the Digital Yuan initiative. So clearly both public and private sector thinking about money, the nature of money, and how we can more efficiently transact in money. So I think from a US perspective, the key here is not to view this as a defensive measure or something, and I completely agree with Neha and Bob. This is not something you can flip a switch and expect that you're going to have a US CBDC in the next 3 months. This is a long-standing effort. This will take years to get right from a policy perspective, from a technology perspective, but you certainly don't want to be in a place where if it is 5 years from now, we start to see increased adoption of either public or private sector competitors or different forms of mediums of exchange. And the US dollar hasn't thought about how you upgrade basic infrastructure for money, for the dollar itself. And I also think that there's a lot of offensive opportunities. I mean, here's a chance to take what already is the global reserve currency of the world and think about how you make it even more competitive in a digital economy, in a global digital economy. So I think that there's opportunities here. I think we can imbue CBDC with US values, US norms around privacy, rule of law, but you got to start now. So having people like Bob and Neha who are actively looking at this from a policy and a technology and privacy perspective is absolutely critical.
That's helpful. What I'm just curious, do you think are there any other, besides you said imbuing kind of US centric values in there, are there any other policy issues that come to mind offhand that you think of when you think of CBDC?
Oh, I mean, there are many. So I should say that through the Digital Dollar Project, a few months ago, we released a white paper that kind of discusses some of the design choices and trade-offs that we need to think about. But there are a number of policy decisions that need to be made. So for example, I'm going to start with one of the most basic ones. You know, I think we're all assuming here when we talk about US CBDC, we're talking about tokenized money. Of course, most existing systems are accounts-based systems. So the idea that you move to a digital bearer instrument is in its own right an important decision that would need to be made. Now, we do believe through the Digital Dollar Project that our champion model of what a CBDC would look like would be a tokenized dollar. So really akin to physical cash, but now you've got a digital bearer instrument for a digital economy. There's also open policy questions about distribution. There are some who propose a federal accounts-based system where it could be the central bank directly providing digital currency or digital dollars to retail individuals. We believe the better system is to maintain the two-tiered banking system and have effectively retail individuals accessing digital currency or digital dollars through a trusted bank or financial intermediary. Obviously, privacy is a huge one, and that's a huge topic. And I actually, I think that's going to be one of the areas where, as Neha said, different design choices will be made by potentially different global central banks and private sector initiatives. You know, one of the competitive advantages for the US dollar or US CBDC would be getting privacy right and viewing that as something that people would therefore want to adopt, especially vis-a-vis other global central bank projects. Interoperability is a big one. It's somewhat of a technical design choice, but from a policy perspective, we need to make sure that a US CBDC is interoperable with other global central bank initiatives as well as private sector projects. So all of these things are policy choices that have real technology-based design decisions and ramifications, right? So there's certainly an intertwining when you think about policy. You've got to think about what's possible and what are the trade-offs.
Yep, that makes sense. So this is kind of open question, just I want to get us all talking, but like, do central banks actually want to hold all of the data associated with a central bank digital currency? And if not, then will that data be collected or kind of held, and by whom, I guess?
I think I'll start with that. That's something new, right? Were the Federal Reserve be tasked with that role, that'd be a very new role for us. And that's something that would take a material investment. And I think that's something that when you talk about what information is collected, I think that comes down to the core protocol. And that's something that is part of our research right now, is just what data is collected at all is a really critical question to understand who sees what and how it is managed. And I know Neha can speak to this far better than I, but that's a fundamental question of what kind of data are you collecting at all? Because once you collect the data, you're responsible for it. And encrypting data is not easy, and it's oftentimes found to be not as secure as you might think it might be. And then encrypting that data could have other performance impacts. So I'll let Neha speak to that in more detail because she's the expert. But even the critical question of what data you collect is foundational.
Yeah, Bob, I think you said it really well. I think a lot of people are starting to realize that data can be a liability as opposed to an asset. And so that's actually a really helpful way of thinking. And from the perspective of technologists, I think we're all trying to come up with new designs that can let sort of these companies, these platforms, whatever it is, not even necessarily a CBDC, interact with our data without necessarily having to see it or see it in plain text or save it. So I think that this is broader than CBDC, this move towards rethinking data collection. I will say that I think the world is still woefully on the side of collecting too much data. And that's why it's really important for us to think about as a society what we're okay with and what we're not okay with. And so we're bringing all of that knowledge with us to a CBDC. And so, coming from the perspective that data might be a liability, then the question becomes, okay, what is it that we were doing with that data? What functions do we need to fulfill, and how might we fulfill those functions in other ways without necessarily having access to plain text data? And this is where I get really inspired by some of the primitives in cryptography. For example, proving that an address is on a list, but not knowing exactly which list it was or which address it was, or who that corresponds to, or proving that a payment was part of a set without necessarily showing exactly where, without being able to trace the flows. So there's a lot that we have there to think about and work with and to apply. Unfortunately, it involves bringing cryptographers and technologists together with policymakers and enforcement agencies, which is not something that has traditionally really been done. But I think if it can be done, it could be really successful.
And Vanessa, I would just jump in and add, I mean, I would be frankly surprised if like the Fed really wants to have the granular data on every kind of US payments transaction. In fact, so the ECB at the end of last year did a pilot, a very, very small proof of concept on a privacy construct. And, depending on the rails you're using to move a tokenized CBDC, you're going to have nodes and intermediaries that will help manage that system. And you could certainly set it up where just those individual nodes, or in this case, it was digital wallet providers, might have some limited information, but they're holding information. Others can be set to hold other information, and no one entity sees everything. Now, of course, that's something, and again, Neha can probably speak better to the technological design, but you can toggle your design of a system to figure out who needs to see what information when. So I would imagine that there'll be many central banks that, to this point of recognizing that data is a liability, I don't think they're going to want to hold, troves of information. The question becomes, what minimal amounts of information need to be held in order to satisfy legitimate regulatory objectives? You want to police for money laundering, you want to police for financial crimes, and that's very reasonable. In terms of policy, you might also, in part of the ECB's test was to say, okay, could we imagine a world where you set small transaction limits, similar to the way we handle like ATMs? You can take out a few $100s from an ATM machine. That's not by law, but you could certainly set that requirement. And maybe you allow a little bit more anonymous conduct when it's a small sum of money. So it really becomes an analog to cash. Values above a certain threshold, maybe it's different in the digital world than the 10,000 limit we currently use, but you could imagine that more information may be required or additional KYC verification be required for larger value transactions. So I think these are things that we need to experiment with. And then ultimately, these are policy decisions. I mean, policymakers need to decide where you calibrate and where you set the thresholds.
Yeah, that makes me kind of think also the question then regarding how do we begin to kind of, maybe if CBDC is kind of still years away, a couple years away down the line, how do we start to marry kind of token-based ledgers with account-based ledgers? Like, where do we start on that? What are some of the enabling technologies or tools that we need to develop for future financial services and kind of payment infrastructure?
I'm going to be honest, I'm not a huge fan of the token versus account nomenclature. I think that a lot of different people use it to mean different things. So it came out through economists. They have this very specific idea of what token versus account means. And then in the cryptocurrency world, we, sometimes use it to mean UTXO versus account-based, like Bitcoin versus Ethereum. And sometimes we're talking about something completely different. But, I think it's probably a good idea if we try to get at the specifics of what we're thinking about with those two words. Is it bearer instrument versus value is recorded at an institution somewhere as a line in a database? Is it anonymous versus known identity? Is it decentralized versus access controlled through a third party? Is it DLT versus a traditional database? Is it UTXO versus Ethereum, programmable versus not? Like, all these different things can actually be combined in different ways. And I think sometimes, some people are thinking about different ones of them when they say token versus account. So not to say that it isn't going to be a challenge to integrate whatever paradigms we end up with. Yeah, that is definitely a challenge.
So Vanessa, if I take your, and to kind of build on that, if I take your question as, how do you make sure that if we're referring to token as a digital bearer instrument, how can you convert or exchange into, say, the commercial banking system or into a traditional commercial banking account? That's going to be critically important. I mean, at least from my perspective, in the Digital Dollar Project perspective, we're not trying to, move to an immediate cashless society. I think having different optionality in terms of forms of money is a good thing, and that needs to be interoperable and interchangeable. So in some respects, what I would hope is that, if digital wallet service providers, some of whom may be provided by banks, would allow for easy movement between the digital bearer instrument, this digital cash, into a traditional commercial bank account. And that would be a really good functionality to have. It may actually be able to increase the number of people you onboard into the commercial banking system. So right now, if you're holding cash, it can be difficult to move that into a traditional bank account. You have to actually go open a bank account, and you physically would bring your cash in and give it to a teller, right, to deposit that cash. Here, if you're not getting paid interest and you're not FDIC insured on a digital cash holding, you need to be able to seamlessly move that into your commercial bank account so that you do have an insured account and you can secure interest payments. Now, I know, there certainly are design choices where you could have the central bank with the capacity to pay interest on a CBDC, although I think that's adding extra complexity. I prefer the view of this being equivalent to cash, but just in a digital world.
That makes sense. So how do differing geopolitical stances kind of regarding data access and sharing kind of come into this discussion?
At least with our work, prior to launching our partnership with MIT, our team had performed significant research with peer central banks to understand what their models were, because we understood that there are very different legal and cultural ramifications for each model. I think we do know that currently the United States dollar is a reserve currency. We know that a significant percentage of the US US dollars exist overseas. So we know that there will be a large overseas appetite for a US central bank digital currency were it be built. So that's something we have to think about when we think about one of the core metrics we look at is how many, I know we just talked about tokens versus accounts, but if we think about the account model, how many accounts would be needed globally, right? So assuming every American gets a CBDC wallet of some sort, you're looking at 350 million or so CBDC wallets. But then from the geopolitical side, or just the global side, how many other people in the world want a dollar or would like a digital dollar? And as we think about potential builds and trade-offs with MIT, is that 1 billion? Is that 2 billion potential wallets globally that could handle these US CBDCs? And what impact could that have on our throughput, right? And our privacy and our security? And so without getting into each individual country's challenges with CBDCs, I think an important thing that we need to understand is demand for the dollar remains extremely robust. It remains a global reserve currency, not only for retail purposes, but for wholesale purposes. And there will probably be a lot of demand for this thing globally. And so what will that volume look like? And how can we build something that won't break, if it's a Singles Day in China or a, Black Friday in the US, how can you build something so resilient that global consumers might want to use it and it stays up and running and won't have downtime?
That kind of makes me think of so much of the US kind of foreign policy strength is bolstered by the strength of the dollar, kind of the depth of our capital markets, as well as just our hold over global payments. And because of that, I feel like economic sanctions in the US have been effective because of all three of that payment monopoly. How do you see the effectiveness of a US-led economic sanctions like changing with the launch of a CBDC? Will that impact that at all?
So I'll try to spare Bob on this one. He's like, I don't want to
look away.
So let's, again, to step back. I mean, as Bob noted, like the US dollar is the kind of select choice reserve currency of the world. And there's a lot of different factors that drive that, right? There's rule of law, there's economic performance. So there's a track record that maintains the role of the US dollar. Technology and friction are but one factor, okay? So I personally think it's unlikely that tomorrow a switch gets flipped and people flock to a different currency, whether it be a private sector offered currency or another public sector currency. But I do think it's fair to question like whether over time, if there's increased functionality, lower costs and efficiencies around CBDC or other digital currencies, could that gradually further erode the role of the dollar? It could. Now, sanctions and policies around sanctions is yet another factor that could, totally separate from this conversation about technology, yes, that could drive certain countries, certain users away from the US dollar. So I want to make sure that we don't overly conflate the issues. Now, certainly, if all of the other factors that weigh in favor of the role of the US dollar as a reserve currency maintain, and we get the technology and the incorporated kind of policies around privacy, if we get that right, you're going to drive further adoption of the dollar. Now, when you switch over to the realm of like sanctions and other geopolitical concerns or reasons why you may leverage the dollar, yeah, you're going to have more influence because more people have adopted. So I think that's a separate factor, but it's fair to raise it because you certainly enjoy the benefits of being able to leverage that tool if a country chooses to do so when you are the reserve currency. So I think it is a different conversation, but it is an important reason why the US should continue to do things to kind of enhance the competitiveness and the long-term role of the US dollar as the global reserve currency.
Yeah, Vanessa, I would just add really quickly, we did a fun exercise of sort of the other side of that. So with Harvard Kennedy's Belfer Center, they do a national security simulation every few years. And last year they decided to do it on the topic of what if China issued a digital currency and it actually gained quite a bit of traction and it affected the United States' ability to enact sanctions. So this exact kind of question. And so we gamed this out at a table with several folks who actually held these roles in US government, Treasury Secretary and whatnot, Secretary of State. And so it was really interesting to see that reaction. I think it's the entire video is available online. So it was a fun exercise.
I saw that actually, and you're right, it was a really interesting situation. But I think I just kind of bring up the sanction aspect because it makes me think of, I think a lot of folks, and probably in our audience as well, just they want to ensure that individuals aren't censored or assets improperly seized if digital money kind of has memory or is traceable. And we heard kind of in other panels of the risk of deplatforming risk. What are your thoughts on that? Like, is that separate? Do you see that are you discussing that when you're thinking about CBDC design?
Yeah, I think I guess we're not really focusing on that right now. We're focusing on, can this value be moved at a speed comparable to card networks? Can it have wallets that we think would be the demand of the US dollar? Could it be resilient in a way that would not break under the most significant forms of stress? And to Neha's point, would it be secure enough to represent the full faith and credit of the United States government? I think there are later layers to that conversation of what do things like freezing look like? What does seizure look like? That will require really in-depth conversations with the parts of government that do that work, right? The central bank is not the part of the government that freezes assets and seizes assets. That is a power of the executive branch, and they will probably have very strong opinions about how that will be done as a stakeholder in the process. But I think, the way we look at it is, if using the airplane analogy, the most important thing an airplane needs to do is get off the ground and land safely. And until you get off the ground and land safely, you're not going to be worrying about the upholstery and the air conditioning. For this currency needs to move quickly, and it needs to move quickly securely, and it needs to not break. And then you need to think about the layers of enforcement on top of that. But I think if we can't make this thing as fast as other forms of digital money and secure enough to represent the full faith and credit of the United States, I don't think we get the plane off the ground.
And Vanessa, I mean, I would just add that any U.S. CBDC has to be subject to U.S. rule of law, right? And our protection. So you think about individuals, like we don't blacklist individuals from access to the dollar or to a bank account unless there's like an actual illicit financial transaction taking place. So, I struggle a little bit, especially in the context of a U.S. citizen, being effectively blacklisted or cut out of our financial system. I have a hard time seeing how that could happen. Yes, if someone's sending, $20,000 overseas to a known terrorist organization, that's likely going to get picked up and subject to appropriate process, blocked or investigated. That can happen, and that's what happens today. But someone who's looking to use CBDC to purchase, groceries or something off of Amazon or send money to a relative, I struggle to see how and why our system would allow kind of blacklisting or blocking of those types of transactions.
Well, I think it's maybe, at least from discussions I've had, maybe more on the privacy, just them knowing that I use that in order to go buy groceries and stuff, that just being known. And maybe that's where privacy enhancing kind of techniques come in that we have that are built into the system design that might mask those types of transactions as you go, and only accessed if the proper legal thresholds are met.
Yeah, I think like step one is making sure that people are aware that these techniques even exist. I think a lot of the times folks making the law or setting regulation might not know about all the tools at their disposal, and they might not know that there is the possibility to use privacy enhancing technology because they don't want to see that. They don't they literally don't want to see me going to the grocery store and have that recorded somewhere. That is not useful to them. And we need to be able to give them system designs where they don't have to store that, but they can still achieve their objectives. With any complex technology, let alone complex economic technology, there can be a lot of unintended consequences, right? And this is something that we think about at the DCI very carefully and very deeply. And we've been thinking about it since we were first started. And it's part of why we do this work at MIT in an academic environment that's neutral, where we can step back and think about a lot of these questions without being, without having to satisfy shareholders or investors or any other constituents like that. And I think there definitely is a way that this technology could be very dystopian. It could be very scary. It could be used for surveillance. It could edge out cash. There is a very dystopian world out there. And I think it's, but ignoring it isn't going to make that dystopian world not happen. We have to get involved, and we have to work on it, and we have to actively help steer the technology in a better direction. This is going to happen no matter what. And if you look at designs like what's happening at People's Bank of China, the central bank has access to every transaction and has access to information, identifying information about all the users of those transactions. So, this is happening, and we really need to take it seriously here. Instead of just saying, let's not do it, we need to actively investigate how we might want to do it in a responsible and ethical way.
And so I got to say, like, it's interesting because the status quo is actually could lend itself to that dystopian vision, Neha, right? Because like as of today, any individual who's transacting online is using what, a credit card or a commercial bank account. And guess what? That information, that payment, that grocery store purchase, of course it's captured. So this information is already being captured. A lot of the large kind of global payment providers are effectively centralized databases. They're very efficient, but from a privacy and an information perspective, I think we have to be careful when we talk about CBDC, view it relative to the status quo, which is not one that's going in a direction of enhancing privacy. So in fact, I think we can do better through designs and thinking about how do you bring some of the privacy that cash actually did and used to provide for more people with more transactions. How do you bring that into a digital environment? So I would even go further and say like the status quo is not exactly more conducive to privacy protections than I think what we're outlining here.
Dan, that's a great point. How do you view stablecoins fitting into this discussion, or kind of messing up this discussion per se?
I'll start. I had experience building a stablecoin in the past. They're very interesting technology, right? They enable a new form of moving value. The value for most stablecoins is commercial bank deposits that are mostly uninsured, commercial bank deposits that are wrapped by Ethereum or another blockchain. I think the most important thing we've learned from stablecoins is that certain values of stablecoins have shown to be attractive. Certainly, stablecoins like Tether have been very, very attractive to the speculative trading community and for capital flight. I think that research shows that fairly clearly. The more regulated stablecoins tend to be more favored by institutions and less so by retail customers. I think that we are learning, and then we're learning about how cross-border trade is assisted by stablecoins. It seems like that's pretty seamless. But I think stablecoins have only really, Tether only has been around for about 5 years. USDC has been around for 2 years. So we're still in the very early days of the stablecoin game, I think. And I think, things like market stresses, liquidity runs for the banks that support stablecoins, I think have yet to be seen. I think they'll be interesting. But certainly there is a desire to move value seamlessly, globally, instantly. And stablecoins permit that. And I think we have a lot more research to do in that field, but I think it's something that we have a lot to learn from.
Great. And mindful of time, I just want to give each one of you just a couple seconds or 30 seconds just to have kind of last point, if you want to make one.
I guess I'll start. I think thank you for having us. Part of our goal in researching with MIT is to get smarter and to continue to engage with folks like MIT, the Digital Dollar Project, and industry to get smarter on all the trade-offs that are involved. I think a lot of work has been done in this space by a lot of smart people and a lot of smart firms. And at least the Federal Reserve Bank of Boston, we really look forward to learning more. and getting a lot smarter on this space, because I think there's a lot of work left to do.
Great. All right, so I'll jump in here. So no, I would conclude with, look, I'm really glad that we have, again, people like Bob and Neha that are digging in deeply on this, certainly from the Fed perspective and from kind of the technological side of this. I think that's critically important for the US. This is exactly what we should be doing. From a policy perspective, I would say let's make sure that folks like Bob and Neha have the resources they need and the policy support and backing to do this, because this is really important and it's really important to get right. I do want to maybe wrap by coming back to the stablecoin question, and I'll even go a step further back. I'd say we wouldn't be having this conversation right now, but for Bitcoin. That's the truth. I think that it got people thinking a lot about plumbing and infrastructure, financial markets and services. So I'll start there. I think that stablecoins have, again, kind of pushed the conversation, and I think that private sector innovation is really important. We don't need to always reinvent the wheel. Let's make sure we leverage the best of from the private sector. I ultimately do not believe that CBDC is antithetical to private sector innovation and development. I think it's more from a CBDC perspective. It's about upgrading public goods and infrastructure. And on top of that, you'll have a lot of innovation built. So I think we're entering a really interesting phase. And thank you for having us on for today's virtual discussion.
Thanks. Neha,
Yeah,
any last words?
Yeah, thank you so much for having us. I just wanted to, I know a lot of the speakers today and tomorrow are talking about, pretty cutting edge privacy preserving technology. And I just wanted to say, keep doing this. This is really, really important. And keep making it better and faster and more secure and easier to use. And it's going to have an impact. It's going to get incorporated into these new technology layers that we're building. And I hope we get to deploy more of this stuff at scale.
Great. Well, thank you all. I very much appreciate your just being able to join this panel, and what a great discussion.
Thanks.
Thank you so much, Neha, Daniel, Bob, and Vanessa, for a fantastic last panel of the day. And a massive thank you to all of our panelists, presenters, and moderators today. I think it was a fantastic first day of the conference. You know, we're just halfway through the event, and I'm amazed at the breadth of backgrounds that are working on and thinking about cryptocurrencies and privacy, and how these technologies are being considered as a way to optimize so many different use cases and industries. Today, we already received a multitude of perspectives from regulators and human rights advocates, data and analysis companies, businesses and academics and technical researchers. And I'm excited to have this continue tomorrow. So hopefully you enjoyed the event so far and are excited for an equally informative day of sessions and points of view tomorrow. As a reminder, day 2 will also begin at 1 and end at 5. So we are excited to see you tomorrow and hope you have a great rest of your evening. Thanks.